Hello, and thank you for joining me on today's video blog. I'm Stephen Pilkington with the Path Home team. So on today's video blog, we're going to discuss what is earnest money, how does that affect your transaction? So for those of you who have experienced a real estate transaction, earnest money or consideration is when you go under contract on a property, you're going to be writing a check to the title company or to the escrow company that basically secures that property. That money is then going to be applied to your down payment at the closing table. So if you're somebody who's bringing 3% down, well, whatever that earnest money amount is, that's going to go towards that 3% down payment at the closing table. In the Denver metro area, most common for earnest money is around 1% for properties that are about $750,000 and under. As soon as you start getting over $750,000, we have a tendency to start seeing more like 2, 3, 4%. And when we get into some properties that are more luxury properties, we might even see 5 to 10% earnest money. And so you might ask, like, well, what does that mean for you as a buyer? Well, as a buyer, earnest money can actually be a great tool for you. And the reason I say that is that the earnest money is very protected throughout the contract with all of the dates and deadlines for the conditions of the sale. Meaning, if the HOA has stuff you don't like, you can back out and you get your earnest money back. If the inspection turns out not to your liking and you can't agree on terms on what to fix, well, you can get your earnest money back. If the appraisal comes in low, if you don't get your loan approved, or the terms come back and they're not as favorable as you wanted, those are all ways that you can back out. Now, from a seller's perspective, well, oh my gosh, like the buyers are putting this money down, but then they can back out at any time. Well, yes and no. So once we get past those dates and deadlines, the earnest money is what's called hard. So it's no longer refundable to that buyer if the transaction should fold for any reason. Now, if you're a buyer and you're, let's say, competing, like is happening in Denver a lot right now, it might be to your best interest to go ahead and offer more earnest money. So if they're saying that they want 1%, and just for ease of numbers, let's say that 1% is $10,000 for $1 million property. Well, if you're going to put down 20% of the property, you might be comfortable to help get you to beat out those other clients, those other buyers. You might be comfortable putting in 2 or 3 or 4 or 5, knowing that you have the ability, should you terminate that agreement, to pull that earnest money back. If it's a very competitive property, for example, I buy some investment properties from time to time, and we've got other investors that we guide on buying and purchasing those properties to renovate. Oftentimes, you have to submit your offer and you're making your earnest money hard, meaning non-refundable if they accept your offer the day they accept your offer. So that's a little bit about earnest money. One last little thing, and we get this from our VA buyers. So if you're a VA buyer and you're doing a 100% loan, so you're putting 0 cash down at the closing table, you still do need to come up with something for earnest money. It just means that, so if the seller is asking for $10,000 in earnest money, and you may not have that cash, but you're approved to purchase the property, maybe you have $5,000 to put down. Or we can do what's called an earnest money promissory note, which if you have questions about that, reach out to me directly and I'll be happy to explain it. But back to that VA person, if you put down that $5,000, well, at the closing table when it comes, you could actually get that check refunded back to you, and then you'd be able to complete your loan with 100% financing, like happens with a lot of VA clients. So I hope you've learned something about earnest money. It's given you a little bit more color and clarity on what that looks like for a transaction and how it can be actually used to your benefit when submitting an offer or even when receiving offers. If you have any questions about this, if you'd like to go into it with more detail, be happy to help in any way that I can. If you have any comments or you'd like to hear about something different on the next video blog, please message me and let me know, or click on the link below and leave us some feedback. So until the next time, stay healthy, stay safe, and I look forward to seeing you again.